G'day and welcome to this week's video. My name's Robert Gowdy from Consortium Private Wealth, and we're going to go through just a quick budget wrap. It was on a couple of nights ago, so we thought we'd just go through some of the key points. We're not going to go through it in a really high level detail, but yeah, definitely the tax cuts. Obviously this is big news and some big savings and extra money in people's pockets. So we'll run through it very quickly. Firstly, let's look at the tax cuts. These have been brought forward and they're going to be implemented from the 1st of July. Now, one thing that we need to be mindful of, these obviously proposals and they need to be legislated. They've got to go through the system to make sure that they're come in and enacted as law. So some of the big changes here is on the left hand side is the existing thresholds, and 18 to 37,000 is taxed at 19% plus Medicare. It's been 37 grand for a long time. That gets a bit of a jump up to $45,000, and the up to $90,000 from that middle marginal tax rate from 37 to 90. So that will now be 45 to 120, which is at that 32.5% excluding Medicare. And again, everything's just jumping up a little bit, the 120. So this is going to mean there's quite a few nice savings for people that are up to 120,000, and yeah, that's where the value is. So it's targeting the majority of the population. They've also made some changes for the low income tax offset. So currently the max you can get is $445. That is now going to max out at $700, and it reduces by 5% between $37,500 and $45,000, and then it still cuts out at the same $66,500. But obviously more value there for people with less than 37,500, and obviously it tapers off quite quickly, but then goes back to the normal cut out at 66,500. Then we'll look at the low and middle income tax offset, and now this will finish up in this financial year, and so $255 if your income's under 37,000, and $1,800 between your income essentially under $90,000. Obviously it reduces by 3% between 90 and 126,000. So more value there, and this is what the savings look like. If you're on $60,000, it's essentially nearly 2,200 more money in your pocket each year based on these changes. So really positive. The government is trying to stimulate the economy, trying to make sure consumers are getting more money that they can spend to keep the wheels turning. So really vital. When it comes to businesses, so businesses that have a turnover of less than 5 billion, so that's really covering off the majority of Australian small businesses. Any asset acquired from budget night and used and installed ready for use by 30 June 22, you can claim a full tax deduction. You can also apply for second-hand depreciable assets if the turnover is less than 50 million. Again, that's going to cover off on a lot of small businesses. And a little bit more information here on other business and second-hand depreciating assets. So between 50 million and 500 million, you've still got the 150 instant write-off, which was implemented some time ago. Superannuation, a number of changes here. The first one, top left, is really looking at saying that your superannuation is stapled to the employee. So instead of turning up to a new job where the employer doesn't particularly ask you your super fund details, they just set up another fund. It means you've got lots of different funds accumulating over time. The employer must pay to your existing fund. The details from that are at the ATO, and where there's no existing fund, the employee can choose a fund, and if there's no choice made, the employer then they can use the default fund. Your Super comparison tool is essentially going to be a new one where it's comparing the My Super products, looking at fees and investment returns. So it's going to give members more transparency as to how expensive and their funds are and what the returns are. The performance will be an annual test. So if it's underperformed for a financial year, obviously need to communicate that to members. Now, interesting one, underperformance is always backward looking, of course, but it doesn't mean the fund underperforms for 1 year, it may well outperform for the coming 5 years. So I think asset allocation is the key to performance, and I think obviously it provides us a lot of transparency and a lot of information. And then from July 2020, this annual performance test will extend to all superannuation assets. Social Security payments, there's 2 additional 250 support payments coming through December 20 and also March 21. So it's going to be tested at these dates here, November and February. Age pension, disability support pension, so there's a whole range of social security benefits just to pump up the ties and help people out in an extremely tough environment. Infrastructure, the government are obviously going to again pump up the ties, and they're going to put in 7.5 billion. This is in addition to other infrastructure builds, so this is going to be for national transport, and apprentices and trainees are going to be employers are going to be incentivised to take on new trainees and apprentices, and the first year they'll have 50% of their wages paid by the government. So that's going to be a huge advantage for young, really trying to get young people into the workforce and with good secure jobs by supporting the businesses. So they're the key takeouts from my point of view. There's lots of other in-depth details. Please remember that it needs to be legislated. But look, big tax cuts. They've brought forward a whole range of tax cuts to help people, maintain the household and consume, which keeps people employed and the wheels turning in the economy. Thanks for listening. We'll catch you next week. Cheers.